Hello traders, Gary Wagner here, just before 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, January 3rd, 2019, and this is the Daily Report for Gold and Silver. A weak dollar and a plunging Dow were highly supportive of the rally, which continues to this day. Gold today closed up almost $12, currently up $11.90 at $1,296 an ounce. That's a net gain of almost a full percentage point. Silver also gain of about a full percentage point, gaining a little bit over 14 cents at $15.79. Platinum was a little lower, palladium a little higher, but the dollar was extremely weak today, down about 0.6%, closing at 95.82.5. Now, as I said, we had a plunging U.S. stock market today. Dow Jones Industrial Average closing near the lows, down 660 points as Apple suffered its biggest single day loss in 6 years, and that highly contributed to the falling markets today. NASDAQ under pressure, down over 3%, 200-point drop at 64.63, and the Standard & Poor's losing about 2.5% at 24.47. Surging gold prices today, it did move gold above our first target. The target that I'm talking about is $12.92. That is the 0.618% retracement. And as I spoke about yesterday, I believe we could see a small band of resistance, and we'll see over the next couple of days between, call it $12.92 and $1,300. That would be this band that I just drew in. If in fact we see this market break above $1,300 on a closing basis, we really could easily take this market as high as $1,324. Right now, we are at a critical area in that we are within striking distance of $1,300. If the market hits $1,300, I believe what we will see is a lot of stops being hit in the market. In other words, short players being forced out of positions, as well as new liquidity moving into the market. Because what we have seen is the factors that have moved gold since the beginning, or call it the middle of November, when gold was trading at around $1,200, are still absolutely in play. And that primarily is concerns about the trade war and the belief that the Fed is going to take a relaxed stance in terms of its monetary policy. Add to that the shutdown, which still exists in the government, and you've got the makings of much higher precious metals, as it is now acting much more like a safe haven metal than it has in some time. Currently, we are long from roughly 1268 and change. We have a stop at 1270, and I am looking to move that stop up a little bit higher. We'll do that within the next 48 hours, and I'm looking at the area of 1280 as our next price point to raise our stop to. And traders, on a technical basis, there are some real bullish factors in gold that I think will add to the momentum of this rally. We are looking at a Japanese average chart, a Heikin Ashi chart. When we look at this chart, we can see that we have solid candle size. We have the absence of any lower wicks. And what that means when there isn't a lower wick like you have here, for example, or here, is that because the opening price is based upon the midpoint of the prior candle, when you have an absence of lower wicks, it says that at no point during the trading session did gold prices go to or below the midpoint of yesterday's candle, and that's what makes that so bullish. We also want to see good solid size in the candles, and we can see that we have had that pretty consistently since the latter part of last year, last 2 weeks of December, and of course into the first of the year. The other thing that I am noticing is the moving averages. When we look at the current moving average, the 200-day, which is this one in red, the 50-day most short-term moving average, which is in green, you can see that the distance between them is narrowing. And as that happens, it comes closer and closer to the real potential that what we're going to see is a golden cross between the long-term 200-day moving average and the shortest term that we put up, which is our 50-day moving average, because I believe that the 50 defines a A short-term trend, interim trend, of course, is the 100 in blue, and long-term trend is defined by a 200-day moving average. If we get these two averages crossing, that would really indicate some solid upward momentum and a continuation of this rally. Therefore, traders, my recommendation is to maintain your current long position, to maintain your current stop. And as I said, I will be looking to move that stop up, and the price point that I'm currently looking at is approximately 12.80. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.